Do you want to make more money from your forex trading? Prop firms have allowed traders to gain access into more funds and therefore make more money from their trading. Sounds too good to be true, right? The emergence of trading firms such as FTMO and MyForexFunds have allowed the average retail trader to gain access into more trading capital than they ever have been before. Prop firms can be extremely helpful for the retail trader to make a living from their trading, as it allows them to trade more capital than they may not have been able to. However, it's important to understand the risk involved if you are looking to get involved with a proprietary trading firm and understand what to look out for when selecting which firm to partner with. Now, the first thing to understand is exactly what prop trading is and how exactly it works. So basically, a proprietary trading firm is an investment firm which allows individual retail traders to gain access into their capital and trade their capital on the firm's behalf. So basically, a prop trader is someone who trades the money of someone else, or a particular firm in this instance, and then makes a return from that capital that they're trading. So the firm basically sets up all the brokerage accounts, the charting software, basically everything that allows the trader to be able to gain access into their funds and then trade on their behalf. And prop firms can either be hardwired in or can be set up completely remotely, like some of the newer firms that are coming out, such as FTMO. So obviously the firm has to make some sort of money to be able to justify having this particular business plan in place. So typically how this works is that the firm will take 20% of the trader's profits, and then the trader will be able to keep the other 80%. So if a trader was make $100 of profit from their trading, $20 goes to the firm, $80 goes to the trader. And sometimes the firms will also have some sort of desk fee involved, and FTMO and FTMO don't, but there may be other fees in behind. But typically how it works is an 80-20 split between the trader and the firm. So why would you go out and take an FTMO challenge or a prop firm challenge and get involved with trading for a prop firm? Well, it's pretty simple. It's access to capital. It's capital that you may not have been able to receive unless you went down this avenue. If you're a standard retail trader and you have a $10,000 account, if you're only making 40-50% a year, then that's not enough to justify being able to take it out full time and become a full-time trader. Whereas if you go and trade for a couple of these different firms and get access into capital that you may not have had otherwise, you're then able to increase the amount that you're returning and therefore make a more significant return and more money from your trading. Because if you do want to make a living off your trading, you will need a significant amount of capital to be able to do so. So let's say you make a 50% return per year, which is a fantastic return for a forex trader. The average annual wage in Australia is $70,000 per year. So you'd need $140,000 of your own capital to be able to make a $70,000 return. And that's just to make the average wage, even with all the risks that are involved when it comes to trading. Especially if you're a younger trader, it's a lot of capital to be able to come across to be able to go full time from your trading. And this is where such firms as FTMO really benefit the retail trader that is profitable, that have sustainable profits in the market, and are able to expand their trading portfolio and gain access to more capital to be able to trade. And one of the other main benefits of trading for a prop firm is the onus of risk. And what I mean by this is that if you're trading your own capital and you take a substantial loss, then the onus is on you. It's your own capital that you're trading. If you take these losses, you have to bear the weight of these losses. However, if you're trading for a prop firm, they typically have maximum losses that you're able to take, whether it be daily or in total for that particular account. And as an example, if some sort of news event came out which significantly impacted the market more than what you expected, even if you have a stop loss in place, the market may have gapped past your stop loss and you end up taking a larger loss than what you would have hoped for and what you had planned for. And if you're trading your own capital, this is your own loss and you have to bear the weight of this loss. However, if you're trading someone else's money, then the onus of the risk is then on the firm rather than on yourself. You see, how these firms work is that they only receive the income from a profitable trader. If there's a trader that's losing money, then you as a trader don't have to bear the weight of those losses. It's up to the firm, and that's the risk that they take through their business model. So if you take a significant loss that you may not have planned for through some sort of news event that you weren't expecting that gaps through the market, then the loss would be taken by the firm and not by the trader. So if you are a profitable trader and you are looking into applying for different prop firms, and this is the position I'm currently in, I'm just about to apply for the FDMO prop trader challenge, and if you are at this position, it's important to understand how the processes work to be able to become accepted and to gain access into this capital. And if we use the most popular prop firm at the moment, which is FTMO, they do have a couple of steps involved in regards to become verified and then to get access into this capital. And the first is the FTMO challenge. And typically what the challenge involves is returning a significant amount of funds within a short period of time. And it's basically just to challenge the trader to see how much they actually can make from the market. Now, there will be limits in place in regards to how much you can lose during this time. And typically to be able to apply for this style of challenge, there will be an upfront fee which you'll need to pay to the firm. So once you paid your fee, there'll be a demo account which is set up for you, and then you'll be able to start meeting the targets for that particular challenge. And as an example, the FTMO one, and this isn't just for FTMO, each firm has their own different style of challenges, but for the FTMO challenge, they require you to make a 10% return within a 30-day period. And on top of this, they require that you don't lose any more than 5% on a particular day or 10% across the total of the challenge. So then if you're successful and you do pass through the FTMO challenge, there is then a verification process. And then during this verification process, it's pretty simple. They require a 5% return over a 60-day period. And again, using FTMO as an example, there isn't any costs involved in that verification process. Now, this all sounds fantastic. You can get access into hundreds of thousands of dollars of different firms' money and be able to make a lot more money from your trading. However, there are some things to consider if you are looking down the path of becoming a prop trader. And the first concern is the amount of traders that actually do become a funded trader. Too many people rush into these challenges without having to put in the hard work in and spending time creating and modifying and really fine-tuning your strategy before you go out and take these challenges and become a funded trader. It's important that you put the reps in first, you get yourself to a position where you're extremely comfortable with your own trading, you understand how the markets move and how to trade your specific plan before you go and take any of these challenges. And the stats are really concerning when you look at how many people really actually pass through these challenges. MyForexFunds regularly put out statistics in regards to the amount of traders that actually pass through their verification process. For November and December last year, they had 5,700 applicants, with only 570 of them actually passing through the first phase of testing. So it was less than 10% of people that signed up and paid their fee actually made it through the first phase of their testing. And then of these 570 people, only 138 made it through the second verification phase of the testing. And then the scariest stat of it all is out of the 138 traders which passed their funding and received funding, only 4 traders actually received payouts from the firm. And with MyForexFund, that upfront fee that we've spoken about only got refunded once you received a payout. So they basically received 5,714 upfront payments for that particular month. That's a crazy amount of money. If you work it out off their smallest account which they offer, which is a $10,000 account, a funded account of $10,000, the payment fee for that is $84. So if you work it out, $84 for 5,700 applicants, they're making over $470,000 for a month's work just from people taking out the challenges. Now that's extremely concerning of how many people apply for these challenges and seeing the low rates which actually pass through and then receive funding. And that's the main concern when it comes to prop trading, is to make sure that you are in a position that you're comfortable with your trading, with your emotions, with your testing, with everything to do with your risk management, and you're in a position to successfully go and apply for one of these challenges and are confident enough that you'll be able to pass through. And that's one of the main reasons that I've been very patient in applying for my first FTMO challenge. I wanted to make sure that I was comfortable and I was in a position that I was comfortable with my trading to be able to go out and spend money to then apply for one of these challenges and then feel comfortable and feel like I'll be successful in getting through these verification processes. Now, I've been trading the markets for over 5 years and I've had my ups and downs when it comes to trading, but I'm now in a position where I feel comfortable with my strategy, feel comfortable with my emotions and money management, and this is now the time I feel right to be able to go out and take out one of these challenges. So make sure you look at yourself in the mirror first before you go and apply for these challenges, because the reason why there's so many of these different firms popping up, because they make bank from traders who are ignorant and aren't in the position to yet go and apply for one of these challenges. And that's how you can make more money from your trading. If you have a track record in place, you're a successful trader, I would highly recommend going and applying for multiple different challenges from these firms, because if you can get access into more capital, then you can make more money from your trading. Thank you so much for tuning in, guys. If you did enjoy the video, please feel free to smash that like button down below, hit subscribe. Thanks again for tuning in. I look forward to seeing you next time.